Hilton brings you new ways to stay, with experiences that let you capture the glory days. Introducing the Graduate Hotels. Each inspired by local college towns, these stays are always original and never boring. Get in touch with traditions all across the country and enjoy a stay that's a class above the rest. Book at Graduate Hotels with Hilton Honors Points at Hilton.com. It's a win-win. Hilton, for the stay.
Reality radio for a really great future. We're talking real money.
Welcome to the Talking Real Money podcast. Hello again, I'm Don McDonald, and Tom is with me. He's back from his wild frat party. And I get in so much trouble with him. Every time I do stuff like this.
You should be in trouble.
Every time I do this, he goes like, people aren't going to think. I'm going, Tom, they know. If they've listened to more than one podcast, they know the only thing we're serious about is our passion for taking care of them. Everything else is a joke to us.
I ask you to look carefully at the shelf. If this isn't the video version, but if you did, you don't see any drug paraphernalia. Anyway, I mean, it's just the notion.
This is not the video version, so they can't see your drug paraphernalia.
There you go. There you go. So, because literally the next day after you announced that on a last Saturday show, somebody walked in, sat down, and said, "Hey, how was the frat party?" I'm like, "Oh God, really? Really? Look at my eyes. Do they look bloodshot?" I mean,
no. Look at how old he is.
I know.
Honestly,
Don
do you
says,
honestly
makes
think
you look
that
younger.
color hair is frat partying?
By the way, I was very happy because I walked in. This was a big reunion, and the guy I hadn't seen in 35 years said, "Hey, Tom, you look exactly the same. Well, except for the hair." So I'll take that. All right.
So anyway, welcome to our little get-together today where we talk about your money and your life and try to make sense out of the confusion that is dealing with money, particularly investing, Wall Street, that kind of stuff. And we have been going through, what is it, May 5th? It's Cinco de Mayo when we put this together.
Yes.
And
okay.
We've been going through a rough year, Tom, a rough year for investors.
Yeah, it's on the front page of the Wall Street Journal again on May 4th. The fact that stocks and bonds have gone down this year. The S&P 500 has lost about 13%. Even intermediate-term bonds have lost over 9%. The safe U.S. government intermediate-term bonds. Oh, this has been scary to people.
Why in the world, Tom? Why am I investing?
Exactly. I mean, that's always the next question, right? Well, why would I invest now? Because you have this dual falling asset classes, right? Stocks and bonds. Number two, you have inflation. Whether it's temporary, whether it's long-term, nobody knows. You have always, if you look back at history, when the Federal Reserve starts ramping up interest rates, what happened? Recession is a possibility. And then on top of all that, you have these geopolitical issues that I know aren't maybe at the top of the headline every day, but certainly what's going on in Ukraine deserves your attention. Why would I invest in any of these things? Why during any of these issues, these times, these difficulties? That's the question I get regularly when people talk to us. And I'm going for an appointment today, and I can almost guarantee you it's always the first question. So why?
So then answer it.
Oh, we want me to answer it. Okay.
I posed the question.
I see.
Why in the world would anybody in their right mind invest during? I know the answer.
Okay.
I'm setting you up. I'm trying to help you out here.
I really appreciate it.
This is a softball for you, dude.
I know. Well, number one,
why would anybody do it? It's a terrible time.
Okay. Right now, for one thing, if you're in cash right now, and we know 18 trillion of you have, or $18 trillion, whatever it is, a lot of cash. I think I have this right. I think generally you want to buy low and sell high. Mm-hmm. Generally, it's better to invest after things have gone down. So if you're market timing, if you think, well, I'm waiting for the right time, this is a pretty good time to buy because stocks are falling.
I'm confident. See, I'm playing devil's advocate with you.
Okay.
I'm confident it's going to go lower. And I'll know because I have such vast experience monitoring markets that I'll know. My gut tells me everything. I believe in my gut. It's going to tell me when we've reached the bottom.
Well, then you give us a call so that we can
Yeah.
do that together. Because
My question is, did you do that in 2009?
Or did you do it in 2001? Did you do it in 1987, et cetera? Well, 87 is getting to be kind of back in the rearview mirror. But
I was in my 20s then, so a large chunk of our audience wasn't even born then.
Good point. But you could go read about it. It's in the history books.
Go read them.
So you raise a very good point. Will you do it, right? Because if the market continues to go down, people lose more confidence, not gain it. Number two, this is the most important part of the whole thing for me. Your asset allocation, your determination of how much in stocks, how much in bonds is about you. It has nothing to do with the aforementioned crises. And there'll always be crises. Next week, it'll be a different series. I can almost guarantee it's something else. Midterm elections, blah, blah. There'll be something else that gets you all worked up. So you should have, for your station in life, whether you are, as Don just mentioned, in your 20s. If you're in your 20s, I think you should be all in stocks. And if you're putting money in your 401k, hooray. I cheer every 2 weeks when the money goes in my 401k. I'm buying more shares at a lower price. Give me more of that. I'll take it all day. And
as long as I don't look at my previous accounts.
I don't. And again, that's a very good point, because I just was texting with a client the other night, and he was talking to this and this and this, and he said, "But I don't look." I think that's good advice. Don't look at your balances.
Smart
every
advice.
day.
And, let's go back to the point you made about putting money in cash. People are taking money out of a declining market, or a declined market. We don't know that it is declining because we don't know what it's doing at this second. We only know a few seconds from now what it has done.
Correct.
But people are putting money are taking money out of a declined market, and they're putting it into cash. Now, these days, cash at most major financial institutions pays less at most than a 0.5% a year. In many cases, less than 0.1% a year.
Yeah, so especially if you go to the major banks. Definitely.
Yeah. So based on my rough mathematical calculation, with inflation running at an annualized rate of 9.6, according to the Treasury, because that's what they're paying on I-bonds, then you are losing 9.5%
a year.
Yeah. So even cash is losing you money, maybe a little less of a loss, but a loss nonetheless. There is no investment right now that you can count on being absolutely lossless when you factor in inflation.
Yeah, and that people do forget that. The expression that I've always liked on that one is losing money safely. It's very safe. You're just losing money.
I take that back. There are Treasury I-bonds.
Yeah.
But you can make zero. You can make zero after inflation with a Treasury I-bond, but you just can't do enough of them to make a big difference.
So back to why would I invest during as I say, fill in the blank, whether it's inflation, possible recession, geopolitical. First of all, here's a great opportunity for you if you're listening to the podcast. No matter where you are in the country, this question will be answered in a method I guarantee with a large G, by somebody who is far more eloquent about all this than I am, Lopescu. He's going to touch on this exact topic at Retire Meet. How's that for a cheap promotion? On Saturday,
that's a good promotion,
May
though, because
14th.
he will make a very convincing case.
He will make a very convincing
because he's smart.
Case. He is very smart, and he'll give you some perspective on. Oh yeah, remember how I felt you just mentioned 2000, 2008, all those times, and then being properly invested after that. Huge difference. I mean, that's another thing to think about. What if this all turns very quickly? The Fed raises another 0.5 point, whatever it is, everything turns around, and you're going to be sitting there going, oh, I just missed the 10%, because we don't know when those are coming. Boom.
Not only do we not know when those are coming, but there is an important, critical consideration when you try to judge or make your investment decisions based on events. You're reacting to events that the market has already anticipated.
And that's the other thing people forget. They think here's what is going on today. I got to do that. And you correctly point out that's already sort of
it's baked in the cake.
into the cake. Yeah, it's already baked in.
Okay,
I mean,
right now, everybody knows there's going to be a 0.5 point increase in interest rates.
That's done. Yeah, that's done.
And so it's built into the bond price.
Correct.
That's why treasuries, that's why 10-year treasuries are yielding 3. But what if, let's assume for a second, we don't know, what if that 0.5 point rate increase suddenly slows inflation dramatically and doesn't kick us into a recession? What does the market do when it thinks that maybe we're going to get out of a recession and we're not going to have a big bout of inflation? If the market believes that today, what happens when they finally report those good numbers? And this, I'm saying this hypothetically, down the road.
Well, you could go back and you could look at March 2009. You could go back and look at, I think it was 2003. You can go back and look at those periods where all of a sudden it's like, oh, I guess it's going to be okay.
The news, though, the funny thing is when the market turns is not when the news is good. It's when the news is expected to be good. So you can't say, oh, I'm just going to wait for the good news and then I'm going to start buying, because by then it's often too late again.
So let's go back. Yeah, let's go back. Number 1, your asset allocation should be about your plan, your future. Number 2, you do need to know your risk tolerance. We give you a free risk quiz. That's something to know about. Number 3, cash truly is trash. Unless you're holding cash to buy something, to do something with it, do not hold it. It's wasteful. And by the way, the same people that in some ways encourage you to hold that cash, guess what? They take that, the aforementioned banks that you just mentioned on, especially the large ones that pay you, 0.1% interest if you're lucky. They take that, and what do? Oh, they invest it, so they make money on your money. No, you should be making money on all of your. I just talked to a man a day or two ago, has $1 million in cash and has had it for about 5 years. So, no, you should be invested at all times for you. And that has nothing to do with markets, inflation, recession, geopolitical events, period.
And we take questions because we want to help you on a specific issue or specific issues that affect you. And you can send those in to us at talkingrealmoney.com. You can also call them in at 855-935-TALK, 855-935-8255. And I'm going to give you one question today, Tom.
Oh, that's it?
Okay. So you can go. I know you need to go. You got things you have to do. It's very important. Right. This comes to us from Alabama. All right. Thanks for the great information. Sorry for the long question. You really provide an incredible service. I'm 35, making $300,000 a year.
All right. That's good.
And investing $125,000 a year.
Wow, tremendous.
My only debt is $570,000 on a 30-year house note at 2.75.
You're going to want to keep that one.
My portfolio is 100% equities, split between U.S. and international. Current portfolio is $450 with an additional $50K emergency. 35. My goodness.
Love this story.
My allocation to equity indexed variable annuities is 0.
Nice.
Because of y'all.
Yeah,
he says y'all, actually y'all.
Oh, okay. Well, that works.
In the spirit of in spite of Northwest Mutual's best efforts. They're trying to sell him one. I was curious what you think of TCIEX. That's the TIAA-CREF International Equity Index Fund.
I got to look it up. I don't know the fund.
I've looked it up. It's an index. It's an international index.
Okay. What's the expense ratio?
It's very, very low at 0.05.
That's pretty cheap. So 5 basis points? No.
Institutional, yes. 5 basis points.
Yeah, here it is. I'm looking at it, yeah.
Deal is, though, it is not particularly a great index because it only holds 826 stocks.
Mm-hmm.
So it's not really, I don't know what they're basing that on, but it is it's basically a light global fund. They don't go off. Looking at the portfolio, they're heavily weighted toward large cap, mega cap, giant. They don't have a lot of little companies, but
And they probably don't have a lot of emerging markets. I mean, I just looked at Dimensional
no, they have none.
emerging markets. You know how many stocks that holds?
Mm-mm.
1,700
idea.
just in emerging markets. 1,700.
Yeah, this is 826 stocks.
Yeah. So it's fairly limited. I mean, again, I think if you looked at Vanguard's international, you end up with more like 3,000 or 4,000 stocks. I'd rather be more diversified. I mean, I like the fact that this is low cost. I'd rather be owning more of those smaller and more value-oriented shares because we know that over time those have provided a little more lift, especially at your young age.
Mm-hmm.
So that would be something. And by the way, if you really like this fund, you could stick with it. But
Well, no,
then
this
take
is in
half
his
of the money.
this is
and
in
do
his
something.
plan at work. This is in his
Okay.
plan at work. So
No, that's-
his plan
that's
at
not a
work
bad fund.
doesn't offer anything but that because that's typical of work plans where they just offer some large cap
Yep.
funds.
Mhm.
So what you do is you over allocate your large cap international, your large cap US into your plan at work, and then you use your outside plans to buy ETFs that are in emerging markets, that are in small cap value, international small cap value, all of those asset classes. Remember, your portfolio should be treated as a single entity. You don't need to get the balance in every portion of it, in every account. You need to make sure the balance is right over the whole thing. And in this way, you can use a fund like that and just overweight it in your 401k.
Yeah, and so in a couple of fund families, you could mention that look at the aforementioned dimensional funds. Avantis has some very fine international funds. So those would be places to go look at that would be far different than what you're getting from TIA. The complete different philosophy as to how the portfolios are put together. So I think that's a great strategy, Don. And then build it, as you say, globally using the asset classes, if you will, that are available in your retirement plan at work, building, I mean, since you're able to sock away so much other money in the post-tax account, then buy those other funds there.
And then he goes on, just a little postscript for you. This is for
Yes.
you.
Oh,
This was
okay.
just for you. It
He
says
loved
also
the frat
Tom.
party too. Yeah.
Also
okay.
Tom. No.
Was that
He's
you passed out
apparently
on the
watched-
couch? I was a different guy. Okay. Yeah.
He's apparently watched our videos.
Oh,
Apparently,
doesn't like the
because he
tie
says,
or something or
"Al-
what?
Also, Tom, my dad used to fly A1s and A4s in Vietnam.
Oh,
I realize that this has nothing to do with money, but I figured you'd get a kick out of it.
yeah. I mean, the A4, I don't know much about the A1, but the A4 is a great plane. Terrific. Wow. That's a great legacy. I did just read interesting about the Vietnam War that only about a third of the American veterans are still alive from the Vietnam War, which surprised me. And maybe you can help me with the math here.
It was a long time ago.
Yeah, okay, I guess so. It doesn't because
Look
it
at
only
us.
feels like
We
I
were
know.
children when it was
Yeah,
going on.
But I didn't miss it by that many years. I mean, it ended in 1975. I always thought a couple more years I might have been there. But the other thing that I found fascinating in this write-up was they said the youngest American veteran from the Vietnam War is how many years old, Don? How many would you say? Now, don't
the
even look.
oldest or the youngest?
No, the youngest. The youngest.
The youngest would be 65,
War ended in
60,
yeah,
65.
Yeah, they said 60. I was like, okay, so that means that like a 13-year-old from America was fighting.
No, 65.
And that didn't-
Because,
yeah.
that's an easy
Right.
math question
I
for
know.
me because in 1974, I turned 18 and I went and
So you had to register.
with Selective
Yeah,
Service. And
That's
my
right.
draft card had on it 1H holding because that's when I by a few months, they said, oh, we're going to put the draft on hold for a minute. And I got that card and I went, H for hallelujah.
At any rate, thank you to your father for his service. And I'm glad, by the way, the other thing that I pointed out in this article was today, if you ask people about Vietnam veterans who were certainly not respected when they came back after the war, that people
No.
today do honor their service as they should.
Absolutely.
Absolutely. The fact that they were either drafted or were sent off to Vietnam to fight in a war that they didn't like has nothing to do. Your politics should not impact your response to them. It could certainly to the people that sent them there. That's a whole different matter. So,
That's where my animosity lies.
absolutely,
Way
those were
back then.
horrendously awful decisions. But anyway, thank you to your father. And
And speaking
the
of
A4
awful
stock over
decisions, watching Gaslit.
here. Oh God, that Keystone Cop series, running across the street with files and dropping
Gaslit
stuff
is about
and-
the
oh,
Watergate
come on.
break-in and
Yeah.
the Mitchell family.
Martha Mitchell.
And
Yeah. Well,
And looking back at it all these years later, you watch it and it's funny. The show is funny, but you watch it and you go, why did he do this when he was going to beat McGovern?
They're wandering around in the office there, and my wife's like, "But I go, look, I pause it, of course, my mansplaining taking over." I said,
"You mansplain?"
Yeah, shocker there. I said, "You realize that he was running like 15% ahead of George McGovern at this time? There's absolutely 100% no reason to do this. Dumbest thing ever."
And for those of you who don't remember that election or were too young, Richard Nixon won 49 out of 50 states.
Guess which one he didn't win?
And he ran against a senator from South Dakota who didn't even win South Dakota.
Yeah. And he was a World War II veteran, by the way. A guy who flew B-24s.
He won Massachusetts only.
That's it. Yeah. Yeah. That's it. So, wow. Anyway. It's a crazy story. It's well done. It's interesting again, and I feel like they should put some silly music behind it sometimes. I'm like, really? Come on.
And Sean Penn. It took me. I watched the entire episode going.
You can see his eyes, but the rest of him,
where is Sean Penn under there?
He's buried under 200 pounds of something on top of him. I don't.
As an actor or a hopeful actor, I look at that and I go, oh, maybe not. I don't know that I want to wear makeup like that.
No, that's a lot. I wonder how long it takes him to put that on, because it is, a lot.
Anyway, that has nothing to do with money, but it is funny.
You enjoy it. It's an interesting series.
Yeah, it's my new binge. I got to watch Ozark all by myself because my wife refuses to watch it.
Okay. Well, sorry for your pain there.
Yeah. All right. Let's see. If you hear this podcast after, next week, I don't know what the date is, the 14th or something, you will have already missed Retire Meet.
Yeah, don't miss it. No matter where you are,
I'm just telling you will have missed it.
If for no other reason,
The funny thing about this Retire Meet is that, no, it's not the funny thing. I've been to all of them, but I'm actually going to get on a plane, and I'm winging my way to Seattle from Florida. And
we're counting on you.
I'll be there on the 14th for Retire Meet.
If for no other reason, see Don. If for no other reason, hear from Apollo Lupescu. If for no other reason, and we love him, but how many more times is Paul Merriman going to speak? And he turned 79 in October.
Did you just take advantage? Actually? I'm the one who usually gets in trouble with Paul for making fun of his age.
Somebody I talked to, like, poor Paul. I feel like he gets victimized.
Poor Paul.
Your show. I'm not picking
Paul
on him.
is
I'm
a
being
smart
honest.
man. Paul is a smart man. He has come to the realization, like so many in the media, that there is no such thing as bad publicity. Just spell my name right. That's all.
And he's done that well. So anyway, join us.
Him a lot.
May 14th, you sign up at Retire Meet. Either if you're listening in the greater Seattle area, come and see us, because I tell you, it's going to be more interesting. But if you can't do that, it's going to be live on our YouTube channel. So go to retiremeet.com and sign up. That's all the time I got. Got to have breakfast. Got to get to the office. So it's been a pleasure.
What are we having today? Is it grape nuts?
I think it's going to be grape nuts with a little bit of, I think I saw a slightly rotted banana, which I'm now going to take advantage of. So
how yummy.
Soft and
all right.
It'll chew well for me at my advanced age. So
that's true. You don't have to put your teeth in.
I'll gum it to death.
Except for the grape nuts. Oh, God, that hurts.
That'll hurt.
All right. Thanks for being a part of our little get-together that we call a podcast. Remember to call us at 855-935-TALK. Visit us at talkingrealmoney.com. If you need a little help with your money, we'll provide it for free with some of our advisors. We will not manage your portfolio for free, but we will help you at vestory.com. And I can't think of anything else to say. Oh, yeah, do subscribe to the podcast. Tell your friends. Watch us on YouTube. Click the like button, subscribe, hit the bell, ring the
and don't forget
chimes.
To bring us breakfast. That's the other one. Okay.
Don't forget the breakfast. Ladies and gentlemen, that's it from here. I'm Don. Over there is Tom, hanging out nearly every day, talking real money.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.